AMC stock is back in the demand zone. $4.82 per share is where we're currently sitting at, up almost 3% on the day. Ladies and gentlemen, we have a lot of updates to give you guys on the economic data front, on the technicals with AMC, as well as the Ortex data. So let's jump into this early trading day update. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. So first things first, today is economic data day. Today is Friday. This was the big day for our data, and inflation, get this, rose 0.4% in April and 4.7% from a year ago, according to key gauge for the Fed. The core personal consumption expenditures price index rose 0.4% in April, 4.7% from a year ago, both a touch higher than expected. Despite the higher inflation rate, consumer spending held up well as personal income increased. Spending jumped 0.8% for the month, while personal income accelerated 0.4%. Very inflationary data that came out today. Super inflationary. Just headline numbers for inflation coming in hot, but also personal spending coming in hot and personal income coming in hotter than expectations. It says, immediately following the report, market pricing swung to a 56% chance that the Fed will enact another quarter percentage point interest rate hike at the next June meeting. Now, if we take a look at the probability for a rate hike right now, the markets have been open for trading about a half an hour now, and you're expecting a rate hike. You are now priced in a rate hike. Yesterday, markets had a 64.6% chance of a pause. Now it's at 36.9% chance of a pause, a 63.1% chance of a rate hike. Now, at this point, we're going to get a rate hike. The Fed almost never deviates from markets' expectations, because if they can do their policy without markets crashing, then that's a good thing, right? If they can stay in line with markets, that's a positive thing. Now, that's why Fed speakers come out and they try to move the markets. They try to say, hey, we might raise again. Or Fed Bullard saying we're going to raise 2 more times. The Fed coming out and saying these things really, tries to coerce the markets into what the Fed wants to do. So this is a negative development. This is not good for equities, for stocks, but markets are ripping higher today. Then the S&P 500 up 0.74%. The NASDAQ, the real winner here, led by AI, is up 1%. Russell 2000 is the lagger again, up 0.15%. And the VIX, again, getting absolutely destroyed, down 6% here on the day. So kind of interesting what we're seeing. I think Marvel earnings here in after hours yesterday was a very positive thing for this market. They said that AI revenue would double in the next year, and that is definitely what the markets wanted to hear, right? The markets wanted to see this AI bubble continue to get bigger, at least for the time being. Now, the big spotlight is going to be on the debt ceiling over this weekend, because it takes time to get these bills passed through the House, through the Senate, and ultimately signed by the president. A lot of people are looking at the Treasury balance that is getting very small now. If we look at the TGA account, we can go ahead and pull this up. This is the Treasury General account. And as you can see, the TGA is now down to $49 billion, the lowest level that you have seen in, years. You have to go back to 2018 to see an account balance that was this low, and I believe we're even lower besides for March 15th, 2017, right before taxes hit that time around. You are getting very close to a default, and a lot of people are talking that there is 40 billion of obligations that come due on June 1st. And that's where you're going to get close to this default when you only have $49 billion left in the bank account. So the big story over this weekend is going to be the debt ceiling deal. Now, debt ceiling negotiators close to a deal with IRS funding in the spotlight. The White House and congressional negotiators were closing in on a compromise agreement to raise the debt ceiling for 2 years. House Republicans are on track to win on some top priorities, including rescinding some of the $80 billion allocated for the IRS by last year's Inflation Reduction Act. Now, some sectors might not like this, okay? If some of the Inflation Reduction Act, maybe some of the $430 billion in renewable energy, maybe some of that gets rolled back, or maybe, other sectors get rolled back, that could be a negative thing for this market, because I'm sure you guys have heard this before, if not here on this channel, if you watch CNBC or you watch any kind of analyst or news site on financial media. The markets have done so well in part because of trillions of dollars of spending. The government has been stimulating this whole entire time. If that is coming to an end and you're seeing some of that pulled back, that's going to be less liquidity for this market. Now, even on top of that, a lot of people are talking about refilling the TGA. There's going to be roughly, upon estimates, $1.4 trillion worth of bonds that will be sold in the second half of 2023. That's going to take a lot of liquidity out of this market. We're talking trillions of dollars that are going to go into bonds that are no longer going to be allocated to stocks or allocated to different, sectors or parts of financial markets. So that's a big story. Even after the debt ceiling is raised, does the Treasury just load the markets up with bond auctions? Do they just sell bonds like crazy? And does that drive up the yields as well? As you guys know, typically yields going higher is bad news for stock. So we're going to see what's going to happen over this weekend. It says details were still fluid on Friday morning, with two officials calling the IRS funding trade-off as a live issue. So they're still negotiating on this, and they leave for recess, obviously, this weekend. So there might be a deal done today. I think this weekend's going to be very newsworthy. I think there's going to be a lot of back and forth headlines. I think ultimately you probably do get a deal. So there you have that. I think the good news from this is already priced in. Bad news, I guess you could say, because I don't think the markets are going to have the biggest reaction based off of a positive debt deal. Now, for AMC does not care. It is up 2.34% at the time of recording this video at $4.81 per share. We will circle back to the technicals after we get into the Ortex data. If we take a look at the overview here for the short interest, the short score is 70. The highest level that we have been at in a very long time. $511.27 million worth of short positions in AMC stock. Estimated short interest of free float at 21.07%. Free float out on loan at 33.9%. 175.05 million shares that are currently out on loan. Days to cover, 6.11. 6.11 days to cover. This has been just going higher and higher. Cost to borrow at 56% for the trailing 3-month average. 100% share utilization. Not too much has changed there. Now, days to cover, that's the thing that I am most excited about, because that's showing you there has been low volume. When volume comes into AMC, that is when the stock is going to rally. It's all about the volume, okay? And then, once that happens, you will see a rally in AMC. To what extent, MOAS or not, that's where, who knows, right? If we take a look at the live short interest of free float, the estimate from Ortex sitting at 21.09%. 109 million shares currently sold short in AMC. Cost to borrow average 63.77%. Cost to borrow max 109%. Cost to borrow minimum at 47%. Interactive Brokers has 150,000 shares currently available with a cost to borrow fee of 51%. These numbers are very, very high still, and they are putting pressure on, hedge funds and institutions that are short in AMC. Now, I feel like there's not enough pressure until big tech does fall. As I said in the last video, markets have already crashed. Like, the crash has already happened, but not in your big tech stocks, not in the stocks that are the ones needed to pledge collateral for these short positions. Remember, due to the risk of AMC, regulators have said that, hey, you got to post high quality collateral because we cannot have more Archegos events going into the future. So that really concentrated the collateral that hedge funds are placing on AMC into big tech. When does big tech fall? Hard to say because you got an AI bubble that is currently taking place. Now, if we go ahead and take a look at the option activity for the day today, a little light to start off. 3 orders totaling $195,000, positive order value of 0%. You're seeing a lot of the $6, $6.50 puts that are being placed that are still in the money that do, contribute to shorting pressure on AMC stock. So there is that. Now, let's take a look at the charts as well for AMC because you're back in that demand zone. If we go ahead and make this chart a little bit bigger, you're not technically in a bearish downtrend, but you're not technically in a bullish uptrend. You bounced almost right off of the prior April 24th low, which was $6 or $4.64. You bounced yesterday at $4.62 per share. Now you're bouncing from here. $4.80 to $5 is a demand zone. What that means is you're getting buyers stepping in around this range. And it looks like, just off of a macro perspective, a lot of your small and mid-cap stocks are due for a bounce here. They're likely to rally even as big tech does fall, potentially in the next couple of weeks. So I think AMC has a lot of things, under the surface, right? We have a court situation we're dealing with. There's a lot of other catalysts as well. GME earnings, which can also be a big one for next week. So we'll see how some of these potential catalysts play out. But I think all in all, it looks pretty attractive buying AMC at these levels comparatively to what, big tech AI. Are you gonna buy that? That's in a bubble. That's already that's already seen years worth of gains, in my personal opinion, based off of AI. I know we don't buy this as a fundamental trade, but when those stocks do fall, it's going to put a lot of pressure on short positions in AMC. Now, on top of that, something I want to point out again for everyone is the short interest went from almost 26% to 21%. That means they're bullish. They're getting bullish on AMC. That's what that means. If they did cover, if it's not manipulation, if it's not some kind of illegal practice, then they are getting bullish on AMC. And that makes me bullish for the next court update. Ladies and gentlemen, that is going to do it here in this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.